Hmm. All right, guys. I'd say I'm ready to go live for this NFP news event. I'm going to share my screen now on Discord, and we see all the people joining the live stream. Let's see what NFP offers us today. I'm not going to be taking any trades. I'm just going to watch price action, and yeah, we will see what's happening. All right, so we are, hang on, let me quickly open up Forex Factory. We get the USD non-farm payment row right here at 8:30. So we still have about 15 minutes left to look at some charts and do some analysis before we... All right, so let's move over to TradingView. 8:30 we get our news. It's a bit weird that it's not showing up on the TradingView chart. Usually you get this little news thing right here at the bottom. So we're just gonna look at the overnight range for the beginning of the stream. So during the overnight range, what we actually saw happening, just let me open up the Discord live chat right here. Yep, here we go. Open chat. What we saw during the New York kill zone, if we delete everything right here, let's delete all the drawings and let's go into bar replay mode. So we see that the DR closed. That's 4 a.m. New York local time, basically. Right here we have our previous day low from 11:20 a.m. New York local time, and we see that for the overnight range, or the London range, basically, I'm just going to be calling it the London range, we saw consolidation inside here, pretty much up high. And then if we continue, we see that we now had not a confirmation yet. With this candle, we had the full confirmation for that we're looking for short opportunities only. So I am going to use this little triangle right here. So we have now bearish confirmation for the day. And now what I did was pretty simple. I marked out volume imbalances on this move to the downside. Whoops, hang on, let me drag this out. Here we have the first volume imbalance, so I'm going to choose orange color here. No, I don't want this orange. I don't know, it looks a little bit too brown for me, for my liking. Let's go for a 30% opacity right here. So we have this volume imbalance right here. And right above it, we have a beautiful fair value gap for us to target here on an M5 time frame. So this is a bearish fair value gap, so we're going to color it in red. We have another bearish fair value gap right in here. So now what I would do is I would wait for the pullback. We also can enable our, how do we say it? We want to see our deviations. Okay, it doesn't show the deviations for this range right here, so we're going to draw it ourselves. We are going to use the DR range template right here. 0.5 standard deviation has already been hit right here at this low. That's our 0.5 standard deviation of our IDR range from low to high. Already been hit. So what we're going to do now is we are going to wait for price to pull back, which it did right here basically. And now what we can do is we can use another Fibonacci target tool, or basically the same one, since we know our 0.5 standard deviation has already been hit, but this time we're drawing it from our most recent swing high, which is going to be this swing high right here, to our most recent swing low, which would be this low right here. So now let me drag out the Fibonacci retracement tool, drag it over to here, and now we see that our optimum trade entry sits right around here at 0.7. Our 50% level of the move is also right here, and the volume imbalance is basically sitting in a premium for a short continuation move further to the downside. Pretty simple setup. You can go down to a lower time frame, but because I'm in replay mode right now, I'm not able to do that. Okay, there's still some time up until NFP news. We're not missing much right now. All right, so we continued further to the downside, making a new low. So we are going to drag this further to the downside because we are waiting for a confirmed pullback into this range. We did not leave behind another fair value gap or anything else. We got a beautiful rejection of the IDR low, which is also great, which could have already been a potential short entry opportunity right here. So we are going to continue. And now we can move over our most recent swing low of this impulse move to the downside, right over to here. We drag our stop loss right over to here. And now we see that our optimum trade entry is right above the volume imbalance and right here around this fair value gap. So this is just confirming the bias for me personally. All right, let's see if this pullback can continue into one of those fair value gaps up higher. We see that we pulled back in this fair value gap and this bullish fair value gap that we have left behind right here. Filled it in completely. Beautiful price delivery. So we're going to color this in green. And let's see. Okay, we've already filled in this first fair value gap. We are now officially in a premium array, premium PD array. But we want to look for a entry right around the volume imbalance, and maybe another entry, another partial entry right here at the beginning of the fair value gap. I'm going to place my stop loss right here on this swing high, or that's what I did today. For the volume imbalance, my stop loss would have been a little bit too big for my liking, so I decided to wait for the entry right here on this fair value gap. My take profit target would have been this most recent swing low right here to the tick, 36 ticks. Let's play it safe. Yeah, let's do 36 ticks. Now what do we see? We continue playing and we see now we are actually triggered into the market, so we can open a sell position right here. We drag out this bearish fair value gap further to future. We also have a bullish fair value gap that is still unmitigated. So we will see. Okay, we got a beautiful bearish reaction from this fair value gap up here. Continued further to the downside, filling in this bullish fair value gap. Filled it in completely, now bouncing off the DR low basically right here. Let me get rid of the Fibonacci retracement tool now. And let's wait and see. We are now right at the opening price of our London range right here, of our DR range. We pulled back up inside this fair value gap. Got rejected a second time, so we could actually, for example, add on to this trade after we see the second rejection. Continue, and now beautiful continuation further to the downside. Beautiful. What you can do now is you can move your stop loss to break even after already hitting a 2.75 risk to reward ratio. And now we can also see that it's 5:55. So with the next 5-minute candle, a new hourly candle is opening up. So we see that the hourly candle open up bullish, and let's wait and see right now. So if your stop loss would have been moved to break even, you would have been stopped out right here at break even. But what did we get? We got another rejection of this fair value gap. So what can we do? We can add on to this trade and continue. So another opportunity where we filled this fair value gap now with the first close inside of this fair value gap. Let's add up another contract. Our stop loss, our risk is relatively small for those 4 contracts that are currently on. We have a 8-tick stop loss. So let's continue. Got pretty close to our stop loss, and we got rejected again, basically from this high volume area right here, where we consolidated for 5, 10, 15, 20, 25, let's say roughly 35 minutes, half an hour. Got rejected by this volume right here, almost a retirement setup. So let's continue playing it. got a beautiful retest, pin bar candle, and now we close below the DR slow. We bounce right through this fair value gap. There are no left behind volume imbalances as of right now on a 5-minute time frame. Continued further to the downside, forming a doji candle. Not ideally what we want to see. Retesting the IDR low, pulling back inside of this bearish fair value gap that has been created right here. So actually you could also put, since it's already running into your direction, put on another contract right here. We got almost got a bearish engulfing candle. Okay, now we had let's continue playing. We're still running. Of course, right here, the support level needs to be broken right here where all those wicks are basically stuck in. And we also have this bullish fair value gap from earlier that we have to watch. Let's get rid of this thing here. Let's leave it on the chart. Continue playing. Again, a retest of the DR low, bouncing back inside of our range, inside of our bearish fair value gap. All right, getting pretty close to our entry now, but that's our average entry through all those contracts that we're putting on. All right, so now we're inside this bullish fair value gap. We can take off one okay, now I made a little mistake here. Let's take off 2 contracts right here, and our final take profit target is going to be this swing slow. Can also move it a little bit up higher. Let's do a 35 ticks right here, or 4.5 risk to reward ratio. Let's continue. We pulled back in inside this newly created volume imbalance right here. Continue playing. Pulled back almost to our average entry price. Got a massive rejection right here at 7:50 a.m. So 10 minutes before the New York kill zone starts at 8 a.m. And right here with this wick to the downside, we can take off another 4 positions. We can continue playing it. Beautiful trade setup. We actually now broke through our previous day's low, so we will see how price is going to react from this level. Right now it's 2:24, so 6 minutes ahead of the news. Beautiful setup. Of course, it also depends where you would have placed your stop loss. I decided to place my stop loss right up here. I did not move my stop loss to break even because I assumed this is going to be a pretty good setup in case price would have continued going back into this area for a next time. I maybe would have closed out a few positions and moved my stop loss to our ODR high, which would still have offered us a 2.4 risk to reward ratio. So let's wait and see. Right here, this candle's high. It was a beautiful trading opportunity. But let's get rid of all that stuff before we start looking at price and what NFP can offer us today. So what we can definitely say right here on a lower, let's start from a higher time frame quickly. We still have 5 minutes left. Higher time frame. Let's get rid of all those deviations. I don't want to see them. I don't really need them right now. Also of our DR, IDR. So what we can clearly see is that we have a beautiful big fair value gap right here. We have relative equal highs also, so that's, I would consider this buy side liquidity from Thursday, basically from yesterday, our previous day low that we already broke now. But overall, I think that the NFP event today on Friday is going to be the catalyst, news catalyst that is going to help us to break out of this higher time frame range. So if we go up to a daily time frame, we can see, sorry about all those lines. Can I actually remove them? Show on chart. Yeah, come on, whatever. Basically helps us to break out of this range. So the question now is, where are we going to break out towards? Are we going to fill in this bearish fair value gap right here to the upside? Are we going to break above the small buy side liquidity? Are we continuing further to the downside? That's going to be the question. I'd say our next buy side or sell side liquidity target would be either the slow right here. This could be an interesting target to look at based on a daily, or those relative equal lows right here. And so this is for sell side, and right here would be our, now let's use those two relative to equal highs right here for our buy side liquidity target. So this is buy side and those two lines are sell side. Let's color them in red. But the whole idea is basically for NFP to break out of this. How many days has this been going on for already? 21 days. No, something's not right here. 13 days. 13 bars, 13 daily bars. So 13 trading days we've stayed inside of this consolidation range. And I think today's the day for prices to either break lower and take out sell side liquidity below those lows. We can also mark up this level right here to finally leave this consolidation range. The next target would be all the way down here at this level. So we will see what's going to happen. Let's break it down to a 4 hour and maybe we can get some more insights. Now you actually see the impact of this consolidation range. We could redraw those fair value gaps up here. So right here, this would be our fair value gap area. Now based on a 4 hour time frame, I'm just adding them up together. Let's break it down to a 1 hour chart. How many minutes do we have left? 2 minutes. We might not make it for the next 2 hours. I'm not going to place any trades. If I would have to bet, I'd say we are going to grab some liquidity above our consolidation range high before we continue moving further to the downside, or vice versa. We're going to grab sell side liquidity by maybe breaking this low and then reversing price all the way back up into this fair value gap here. But unfortunately, I'm not a magician. I am not able to tell you where exactly it's going to go or what's going to happen today during the NFP news event. So we are just going to mark up our current high of this consolidation and our current low of this consolidation and see what we get. So we're 1 minute ahead. Let's break it down to a 5-minute time frame. Turn on the DR IDR. No, actually, we don't really need it. So we got a bullish rejection of our previous day's low. So we will see what's going to happen. I'd say if I would have to bet, we will see a continuation move to the upside since we already rated sell side liquidity below those lows from yesterday. But we will see. We could see a trend line break of this little trend line right here. That's holding this downtrend in place. All right, 29. Are you ready? Okay, here we go. NFP news. And we broke the trend line. Big move to the upside. Ooh, huge reaction. Sell side liquidity at the low taken out. So let's wait and see if we can actually take out our previous day high as well. Beautiful setup here below. Let's actually see if this would have been a setup. But we had a low, high, lower high, lower low, lower high, so no market structure shift. But what we did get is a beautiful fill of a volume imbalance right ahead of the news. Right here we had a volume imbalance, and right here another small one that already has been filled. So it filled in the volume imbalances prior to the news, or basically with the news, and now we are on our way to the upside. So let's check out a 15-minute time frame to see if we can break above our previous day high or above our consolidation high on NFP Friday. Let's check out US30. US30 also made a massive move to the upside. British pound US dollar pretty much the same. I was expecting longs for the whole day, but unfortunately I did not capitalize on it because I was looking for shorts because we were below the previous day's low, but I wouldn't get filled anyway with my take profits somewhere all the way up here. No chance for that. Your spread and your slippage and everything would just be too hectic. Very similar thing on the Australian dollar, US dollar. We are below our previous day's low. We consolidated, trapped volume below for an impactful move to the upside. But let's watch SP 500 again. So we broke the trend line. Let's do some fair value gaps somewhere around this area. Right here we would have a fair value gap, and we have an old unmitigated fair value gap up here. Oh, I mean, we touched the side of it. But that's left to the upside. We will see what we actually get now. If this is just going to be a huge stop hunt for everyone that has been short for the past maybe day or 2 days already. So we will see how that's going to play out. All right, 5-minute chart. Let's check it out on a 1-minute chart. So we got our initial pullback. Let's see if this can keep up. Beautiful reaction. I made a live stream, I think, before New Year's Eve after Christmas on my YouTube channel. The link for that is in the Discord live trading chat, where I was talking about the importance of the previous day low and previous day high. And look at this. Beautiful. Right ahead of the news, we took out the lows with a beautiful downtrend move further to the downside. I already talked about the entry model basically here, where we pulled back right inside of those fair value gaps. Inside of this, very likely this is going to be our volume point of control. If I'm using my drawing tool here from our swing high to our swing low, right here, volume point of control. Where did we wick to? Right here to our volume point of control, because that's the area where we consolidated for the longest period of time, basically reaccumulated some shorts or distributed some longs. Perfect retest of our volume point of control. So this volume high area is what I would have marked up on my chart right here. Wicked into it once, twice, and 3 times, and every time we wicked inside of it, we got rejected 1, 2, 3 times. Also lined up perfectly with our 50% of the ODR line. So we will see. But so far, nice price action today, especially for the overnight range. I'm not sure what happened during Asia because I did not watch it. I'm still sleeping at that time. So let's see how this 5-minute candle is closing in about 30 seconds. We can have a look at the overnight range. So we had a very narrow post-session range for the Asian range, 15 points here on the SP 500 futures contract. And then we continued with a break further to the upside. And here is a dead giveaway for pretty much what was about to happen. So we left behind a beautiful volume imbalance right here, right around the 50 level. With hindsight, the 50 level of our DR IDR high. We closed, wicked inside of it. What did we have right below it? Or it basically correlated with a fair value gap. So we had a fair value gap that got reconfirmed by this volume imbalance right inside of it. So this is the volume imbalance, and that's the fair value gap. We completely filled in the fair value gap right to the opening price of our Asian range, basically starting from 7:30 until 8:30, and then out of this move we wicked up to the upside, left behind volume imbalances right here. The first one that the first volume imbalance right here, or the second one, has been filled in for a continuation move further to the upside. It depends where you got into the trade. Of course, this would have been the ideal entry right here. I think if we draw our DR range, we should be able to see that I think 2 or 3 standard deviations of that thing must have been hit. So 2 standard deviations have been hit. We consolidated between 2 and 1.5 standard deviations, or maybe between 2 and 1 standard deviations. And then let's check for 2.5 and 3. Okay, we hit 3 standard deviations of this volume imbalance entry. And let's go for minus 3.5. We did not get up to the 3.5 standard deviation, but beautiful trade setup based on a very early entry with no proper confirmation of the DR IDR, but based on a trend continuation setup. We did not break our, let's say, uptrend right here. Did not break it. We held support along this trend line, pretty much the front side of the move right here. If I actually draw it a little bit nicer, that's just for reference. Trend lines, I just draw them up for, like, let's say, to know what retail traders are looking at most of the times. We bounced off it, had a beautiful fair value gap, volume imbalance continuation play for the Asian range for a pretty much very high risk reward. If you would have entered right here, let's say at the 50% level, or maybe right here on the volume imbalance with your stop loss below the low, and you take profit target, let's say you would have traded up to 3 standard deviations for a 4.25 risk to reward ratio. Beautiful setup. So let's see what price is doing. We're pulling back. Let's see if the overnight range high, DR high, is actually going to play a role in this setup. It's going to be interesting if we're holding support right above this level. And of course, if you have any questions, feel free to ask. Just send it into the Discord live stream chat or on YouTube. All right, looks like we held some support on our overnight range high. Let's see if we can continue with this move to the upside. So as long as you haven't been in any shorts prior to NFP news, I'd say well done. If you, for example, entered below the previous day low, this was my plan, but I decided not to trade today. It's all right. It's all right. It doesn't hurt too much, just a little bit. Use 30 pound US dollar, also big wicks indecisive. Let's see how the market, how we react at market open at 9:30 a.m., which is going to be right here, representing the market open. Let's see what NFP offers up until then. This is our previous day high. So as of right now, we only took out the previous day's low, reversed right from here, basically below our previous day New York DR range right here from 9:30 until 10:30 a.m. New York local time. Move below it with a, let's say, you could consider it a momentum shifting candle. I'd say enough breakout traders consider, of course, if basically requiring that they're not aware that NFP news are coming up within the next 15 minutes or 10 minutes. This could have triggered enough sell stops right here into the market below the slow. Let's say they had a few ticks below the slow with their stop losses maybe right around this swing high, or maybe this high right up here for a continuation trade further to the downside. Even on a daily time frame, it could have triggered enough sell stops for smart money to accumulate shorts right ahead of our NFP news event. Filled it in, pulled back right into those volume imbalances, and boom, there we go. Let's check out volume profile here from this move from here all the way over to here. Interesting volume inefficiency right here. Let's wait and see what is going to happen. I'd say right now up until 9:30 we are not going to see much. We're going to see consolidation with maybe some movement up higher or down lower, but nothing really special up until 9:30. That's usually what happens after such a big candle to the upside that is not followed by another few big candles that continue with this trend. So we will see. All right, let me go over to the live stream chat, see if we got some questions. No, not as of right now. Did you take some trades today, or basically prior to the NFP news? Did you catch this beautiful volume imbalance entry right here below our previous day's low? Would be really interesting. All right, so we just continue with this consolidation right here. Let's wait and see. 1 minute time frame. We could actually even go down to a 15-second time frame while we're watching this consolidation. I think, yeah, for a second chart you need TradingView Premium at least. If not, maybe you can even have or unlock it with Pro Plus on TradingView. Not really sure about that. All right, so we keep consolidating. Let's just draw up the range for right now. that we're consolidating in with the highest high and the lowest low close. All right. According to ICT, NFP days are usually one-way moves. Interesting. So I guess we then should expect a continuation move further to the upside. What I think is really interesting is right here, our rectangle. I'm going to color this in yellow. This is the gap basically between our ODR, from our overnight range IDR high to DR high, this little gap in between that is used for the retirement setup. We wicked inside of it once, twice, 3 times, and we held support above it. Not sure if that's coincidence or if that's actually the algo repricing. I'm not too sure. Alright, but we see the continuation move further to the upside, watching it on a 15 seconds time frame. Beautiful. What about CME data? Is this is mandatory or not? Yes, CME data is pretty much mandatory if you trade CME futures. Otherwise, your data will be delayed, I think, by 15 minutes or 10 minutes. And you can't trade with a 15 or 10-minute delay. And I think it's only something around $4 on TradingView to purchase CME data. It's well worth it. Let's compare the US indices and quickly open up a new chart and see what all three are doing next to each other. So let's look at those right here. So we have the SP 500 open. Now we need NQ1. And now we need YM1 right here. Let's check it out on a 15 now. Let's go to a 15-minute time frame quickly. First of all, we are going to sync all the layouts with the interval, time, date range. We're not going to sync this signal right here. So let's see. Beautiful support bounce. I guess a lot of supply and demand traders basically drew up one of those zones right here. I would have not taken this. Hang on. Not a supply and demand trader, but let's see if we see some divergence between the US indices. So on a 15-minute time frame, we can see that Nasdaq allegedly broke below the low that was created on Wednesday, the 28th of December. On the S&P 500, we can clearly see that we did not break this low. We went below the low that was formed yesterday on the 5th of January, and we did pretty much the same thing on Nasdaq. And on US 30, we actually had more SMT divergence. So this was the low from yesterday, 5th of January, and our low today basically. We did not go below the previous day's low. So we have higher lows right here on US 30 index. Right here, the low at 11 a.m. Let's just go for this. We had a lower low basically. So even more SMT divergence. That would confirm a bullish bias. And touch below our previous day's low, which is right here. And this huge divergence between Nasdaq, S&P and Dow Jones that we actually broke below a low from last year, which is very likely going to be a weekly low from the week between Christmas and New Year's Eve. So we actually wicked below this low as well here on Nasdaq. So let's see. Let's go back to a 5-minute time frame. And we see that as of right now, US 30 is leading the move. I mean, it's fair enough. It basically started from the highest point. Relatively speaking, we did not even go below this low from yesterday. But on all the other charts, we actually did. This is our low from yesterday. So right now, US 30 is leading the move already almost 350 ticks here on US 30 or the E-mini Dow Jones. So let's see, the first bounce move would have very likely been the breakout out of this consolidation, which was support of our overnight range high, basically right here, where we wicked once, twice, and 3 times. And now I guess we're filling in this first fair value gap further to the upside. Let's go to a 500 time frame. This fair value gap right here. Let's wait and see. This was also a very beautiful setup yesterday. We had this was the overnight range basically during the London kill zone. We had this beautiful trend to the upside basically for the whole time. Yeah, let's use this trend line right here. We broke below it, but I'd say we did not break market structure. Did we break market structure already? We had a swing low, swing high, swing low, higher high. We pulled back. So basically what we would have seen here would have been a false alert of market structure. So we broke market structure right here, which would have given us a indication that prices are likely to reverse, but we got this false break right here and continued making a new higher high right here up until 7:30 a.m. New York local time. And then we had another change of character or market structure shift right here. As soon as we broke this low, we left behind a few fair value gaps on the way to the downside, which is great because compared to the entry right here, we only had one fair value gap that we could have entered on, but here we actually had one, a small volume imbalance right here, and another fair value gap. So plenty of opportunities for you to get into this reversal trade right up here for a continuation move further to the downside, right into the New York kill zone. Beautiful trade setup. Okay, so right now we see that we are inside of this fair value gap, and we again got rejected here on an M5. Let's compare our US indices. So we had SMT divergence going on. Definitely not a question asked. Even here on a lower time frame, we can see that while S&P 500 made a higher low and Nasdaq made a higher low, we see that on US 30 or the Dow Jones we made a lower low, giving us even more insights for SMT divergence. Let me get rid of all those other lines if we're on a slower time frame. Beautiful SMT divergence. So let me make this a little bit thicker so it's actually standing out. All right, here we go. So what we could be looking for right now would be continuation setups, but I think it already moved enough for today, and it presented, at least on the S&P 500, very nice entry opportunities today already during Asia and the London kill zone, or the overnight range and the Asian range. Not really necessary to continue trading after that, especially for a high impact news day. I think ICT also called it a non-professional trading day, or not for professionals, NFP, not for professionals, because he's avoiding to trade today as well. And I think for most traders that are trading today, maybe they got lucky, they spotted this SMT divergence right ahead of the news, or maybe got in this first bounce trade for a continuation trade further to the upside. But I did not even think about getting into a continuation trade or actually placing another live trade after my overnight range trade played out perfectly. So we had those fair value gaps right here, in which we wicked in 3 times across all the charts right here with a sideways movement. Continuation breakout further to the upside, I think pretty much all at the same time. 842, yes, or broke out of this consolidation at 842 with a continuation, leaving behind a few more fair value gaps. This is currently our high. We're about to break it on NASDAQ. We already broke it a long time ago on US 30 or the Dow Jones. Continuing to make higher highs. As of right now, we did not get a fair value gap continuation or volume imbalance entry other than this one right here, where we pulled back into it, had our first bounce for a continuation move further to the upside. But in my opinion, not really worth the risk, because where would you really have placed your stop loss? Let's say you would have entered right here, your stop loss would have been below here, or maybe also on S&P 500. Now we broke the high here as well. Let's say you would have entered based on this fair value gap. Your stop loss would have been this low, or maybe the low of this candle, because you would have to give it enough space for it to come even further down inside of this fair value gap, which is already a almost 20-point stop loss here on the S&P 500. Not really a nice setup unless you're choosing to go high risk and going for a, I don't know, a 8-point stop loss right here, right inside of this fair value gap. But in my opinion, this doesn't make sense to me to enter on such big fair value gaps. Maybe on a lower time frame. We're already out on a 1-minute time frame, so nothing to worry about. All right, let's draw up some fair value gaps that are still left behind. All right, let's close this one out too. We had this little movement to the side right here, a little bull flag, whatever you want to call it. Continuation break. So now we went above the high right here that was formed at 8:30 on NASDAQ, S&P, and the E-mini Dow Jones. Relatively speaking, we're up much higher on this chart right here on the E-mini Dow Jones compared to the other two, but still we made a higher high followed. So let's see. Let's go over to our 5-minute chart. Beautiful reversal right below our previous day low, and especially if we look at the volume imbalances that have been left behind on a 1-minute time frame right here below our previous day's low. Let me zoom in here so everyone's able to see exactly what I'm talking about if you join the stream a little bit later on. Volume imbalance 1, volume imbalance 2. Let's make this orange so everyone knows what I'm talking about. Volume imbalances, beautiful, very beautiful movement to the upside. Also a small little fair value gap right in between. So we basically had a volume imbalance fair value gap sandwich right here. Color this one in green with SMT divergence. So I'm not sure. Of course, if this would have been a normal trading day, this would have been an ideal entry basically, but it's NFP news. So probability of you being filled as soon as this candle open up are very low. Maybe you could have gotten in some fills right here within this 1-minute candle, but if you click on buy right as soon as this candle opening up, you're very likely going to get filled somewhere around this area, especially with CFD brokers. With CFD brokers, if you have bad luck, you get thrown in somewhere up here or somewhere up here when there's actually liquidity to fill your trades, or someone else to take the opposite side of your trade. All right, so now we're starting to fill some fair value gaps right here. Also on NASDAQ, the same goes for the E-mini Dow Jones. For a continuation trade, I'd say the next buy side liquidity target, in my opinion, would be our previous day's high. So this would still be a small little move right here to our previous day high, 71 ticks. Can actually put on one position right here, since we're inside this fair value gap, just a small paper trade. Let's move our stop loss below this low right here, and our take profit target is going to be our, hang on, let me use the indicator, and our take profit target is going to be up here. Let's see if we can get a bullish reaction of this fair value gap. And if not, we have another one that's further down. Another one, enough areas where price can react from. Let's check the 5-minute chart if we have some volume imbalances that are likely to be filled. No, not as of right now. Also not on over here. Nope. No volume imbalance. So this would be my next target for a continuation move further to the upside. Retesting this slight consolidation right here. So let's wait and see. Let's draw up the other fair value gaps across all three charts. And again, if you have any questions, feel free to ask them. That's why I'm doing those live streams. Who's calling me now? Sorry about that. I just received a call from a mate. Oh, come on. Hang on, let me quickly reply to him that I'm currently live streaming. All right, there we go. Beautiful trade, beautiful reaction of this fair value gap right here. So let's put on our executions right here. Beautiful. So let's see which chart is actually going to lead into the move. Breaking this high first. Here's the first one that's going to break this high on a 5-minute time frame. Did we fill any fair value gaps in? No, not really. Other than this one right here, this one and this one. Nothing has been filled in yet. Yeah, that is still going to be our buy side liquidity target, and after this target, not far ahead, is going to be our next target at almost 3,900, which is a 000 level. So really interesting, a really, let's say, psychological level. That's a term a lot of people like to use. All right, so let's see, from our most recent swing high to swing low right here. Got a beautiful optimum trade entry fair value gap trade right here. 0.5 standard deviation, full standard deviation would be right up here for the continuation. Let's wait and see. Another fair value gap that has been put in place. Looks like US 30 got the strength today, while Nasdaq is lacking a little bit in power. Same for the SP 500, now pulling back inside of this newly created fair value gap. Pulling back. We don't see this pullback right now on Nasdaq. We will see. Maybe we get some nice SMT divergence at the top, which would be super cool, but we will see what we're going to get, because as of right now, we did not break our swing high right here on the E-mini Dow Jones chart. This is still our swing high. We will see if we're able to break this right here. All right, let's drag this high also over till, yeah, let's do it till here. Okay, now we've fully filled in this fair value gap right here. Let's see. We initially got a bullish reaction from this fair value gap, but now it looks like we're actually getting rejected from it. Move my stop loss closer to my entry. All right, check our 5-minute time frame. In 3 minutes, the next 5-minute candle closes in. What's the current time anyway right now? So we just had a new hourly opening. That's interesting too. I almost missed that. New hourly opening right here with this candle to the downside. This is very likely why our trade did not play out right here. Hourly traders got into this market and put in some more short momentum or whatever it is. That doesn't have to be the reason for this move to the downside at all. But new hourly candle opening, move to the downside on all three charts. So let's see. We still got 28 more minutes left until market open to see how the market is going to react to our NFP news event. Okay, we're running in profits again. Let's see which one of these is going to break our high first. All right, I would place my money on US 30 to break the high first. All right, again getting rejected right up here. So let's see if we can actually continue up higher. Small little up triangle is forming right here on the E-mini Dow Jones chart. Let's see, we could also draw a trend line across this right here, but screw it. The US 30 chart is about to, okay, that's in CFD obviously. Let's actually put on the daily high-low indicator onto our charts. We're just about to break our previous day high on US 30, so that's how high, but we haven't broken our previous day's low today on US 30, so I guess that makes it up for it. I'm going to move my stop loss now to break even right here. Not risking any more than that. And let's also put it on NASDAQ indicators. All right, let's look for our previous day's high. So we also took out our previous day's low pretty early on, basically during the London kill zone. Continued making this lower low. And let's see if we can actually take out the buy side liquidity as well with this impactful move. But I'd say this really depends on what we're going to get at 9:30 a.m. market open. Can you explain volume imbalance? We highlighted, but if it was filled in the past, does it still valid and price tends to move towards? Well, so I saw that too, that some people continue looking at already filled volume imbalances. So I would argue in the same way as people would argue with fair value gaps. So if a fair value gap has been filled, of course it could still play some role or some importance, but once it's filled, it should be filled. I mean, it's a fair value gap. Price returns inside of the fair value gap or inside of the volume imbalance to fill in the imbalance or the fair value gap to continue its move into the initial direction basically of the whole trend. So I would say once it's filled, it's filled. I mean, I wouldn't continue dragging out already filled fair value gaps over my chart or filled order blocks or stuff like that. It's simply filled, and I think that's how you should treat it. I'm not sure, like some people draw over some volume imbalances from I'd say a couple days ago, and that's nonsense to me. That's not how I would use volume imbalances. Like for example right here, we had those small volume imbalances right here. We filled them, we wicked through them, and inside of them we had this little fair value gap here. Of course, this is prior to news, but I would not continue dragging them out. I mean, this area right here is already an area of support, or where we could see potential support below our previous day's low. Right here, where we basically bounced from ahead of our NFP news, explosive move to the upside, but I would not continue dragging out volume imbalances like crazy, because volume imbalances, especially on a lower time frame, they're happening so oftenly, and dragging them out through time and through time, even though they have been filled already, doesn't make lots of sense to me. All right, so we got stopped out at break even right here. We also continued to break further to the downside here on US 30 or the Dow Jones. Usually what we see is that if we get a consolidation up high, as like for example this movement to the side right here, the chances that our previous day high is being taken out is very high. I would not act on it depending on the setup, but the probability of our previous day high being hit, if we consolidate our range just underneath it or just above it for the previous day low scenario, yes. All right, so we got the initial rejection. Let's check the level. Yeah, you could consider this a breaker block or a bearish order block. Let's check out some forex pairs. Pretty much the same thing. We wicked above our Asian high right here, but no big range expansion or anything. Of course, a nice movement to the upside of a total 70 pips, but nothing really spectacular. I think yesterday had more impact as of right now than NFP today. We will see how we are going to react in 20 minutes at market open. Let's go over to the British pound. Pretty much the same thing. I mean, we extended the New York kill zone box by a little bit in the period between each, but nothing really spectacular happened so far. Of course, a very volatile move to the upside, but again, nothing really special. All right, let's see. We're still pulling back. Let's compare the indices. So our market structure shift would be right around, so our most recent swing high would be right here. So our market structure shift on a 1 minute time frame I would consider to be right here. Let's make this a baby blue line. It's our market structure shift. Same for here. This is our most recent swing low. I'm not really sure if you would treat this wick here to the downside, but let's just use this one for reference. Let's also use it right here. We already broke it here as well. We already break it on US 30. No, we did not break it on US 30 yet. If we would have had, for example, a beautiful SMT divergence when, for example, the Dow Jones would have wicked above our previous day high, or maybe even close above it, and then making this structure break, this would have been a great opportunity to maybe look for a reversal, but I would stay away until 9:30 a.m. opening to see how the market is going to react from based on the news that we received. Stock market. I know pre-market is already happening, but we will see how the open is going to react. We can also add another one right here. Hang on, can I put 4 columns on my chart? Perfect. What I would look at here would be the SPY. Why might US stock data look different? No, because it's about to open up. Let's see how the market is going to open up here. So I'm going to keep this open, but I'm still focusing on those 3 charts. So we had our market structure shift and we left behind fair value gaps to take this thing short from. Like for example, this one right here. no proper volume imbalances that we could be targeting. Let's color both of these in red. This doesn't mean the market has to reverse from here. Maybe to trap some traders short. I'm not sure. I'm not going to participate. I'm going to take some paper trades throughout the session or throughout the NFP news event, but nothing live. I already banked my profits in for today during the overnight range. All right, so let's see. We can drag this over to right here. I consider this as failed, and I'm not going to continue dragging out fair value gaps throughout time. Fair value gap right here from this low to this high, and another fair value gap bearish from this low to this high, which has already been filled. So let's see. We also have a fair value gap, a bullish fair value gap that's right below our market structure shift. So we could just actually be filling in this fair value gap here on a 1 minute time frame for a continuation move further to the upside. All right. Let's go over to our 5-minute chart to see if we're not missing anything important based on a 5-minute time frame. No, I wouldn't say so. But first of all, we got our first pull. We are also inside of a higher time frame 5-minute fair value gap right here. So this is also interesting to see. So we not just have a 1-minute fair value gap right below our market structure shift, but also a 5-minute fair value gap that we now wicked inside of. I could imagine across all 3 charts. I'm going to take a quick break, going to the toilet. I will be back in a few seconds. Alright, I'm back. We've got a new question. Does fair value gap may be fully filled, even overshoot, and you consider it still valid? Let's take into consideration bearish fair value gap. We sell at 50% of the fair value gap and stop loss goes just above the fair value gap, right? But it is often overshoot. How to handle with that? Move stop loss. Hang on, let me catch my breath. Just had a speed run to the toilet. I'd say that's just part of trading. That sometimes, let's say, your strategy is basically that you enter at a 50% level of the fair value gap and you do that every time, and you place your stop loss the same way every time. The times it's overshot is going to be when you have your losing trades, basically. And I would consider this just part of it. I mean, sometimes the fair value gaps work and sometimes they do not. Do you consider a market structure shift valid when all three futures have shifted? I mean, yeah, sort of. I mean, all three futures have shifted. Not really. We're still looking at US 32 or the Dow Jones to basically break the low. We just bounced off it. I mean, of course, this could be a reverse opportunity, but we're now only 10 minutes away, so 2 5-minute candles before the 9:30 opening, so that's why I would stay away from this market structure shift. I know, even though we beautifully filled in this fair value gap, but on a higher time frame we also have this 5-minute fair value gap waiting for us here, so I would not be looking at a big reversal further to the downside. We could measure the whole range basically of our impulsive move to the upside. Could maybe trade it down until this fair value gap right here is filled to the 50% level, or maybe to the 0.7 level, but yeah, no, I would not act based on this market structure shift. It's pretty similar to what we saw over here. Where do we have it? We had this market structure shift, so we had our continuation from the overnight range. We broke out, we retested the IDR high, we continued going up higher, bounced off the support trend line, if you want to call it that, made a new higher high, making this our most recent swing low or short-term low. We broke the short-term low, we left behind a small fair value gap, got stopped out, making a new higher high, making this our new short-term low. We broke it, left behind better fair value gaps to basically trade off on. So 1, 2 fair value gaps. Entry right here, you would have been triggered into the market, got rejected right away. 8:15 candle, that's when the employment change news came out yesterday, the NFP news. And massive move to the downside, followed by a continuation right here at market open. So now of course it's great if you see that all three future charts have the market structure shift pretty much at the same time, but it's not a requirement per se. Also news at 10 a.m. Let me quickly check Forex Factory. ISM Services PMI. Okay, so we also have news at 10 a.m. That's quite a hectic day today. And we have another FOMC member speaking. I think we have the next FOMC news event at the 31st of January. So yeah, but still way too many news on today. We had the average hourly earnings, non-farm employment change, the unemployment rate. Then we later on have the PMI. Oh, that's a lot of news coming out. Too many to trade. Now this could have been a beautiful entry short. Nice pullback into this fair value gap. Also on NASDAQ. We even got to fill a higher fair value gap right here on US 30. Forming a new lower low. Maybe just taking out the sell side liquidity below the equal lows right here. Relative equal lows. We will see. Let's check the 5-minute time frame. Go back. All right, we now fully filled in this fair value gap. All right, let's go to our comparison chart again. So we formed new lower lows across all three charts. We are now 8 minutes away from the opening. Yes. No, come on. Pulling back into the market structure shift. Now we actually could see a continuation of the retracement. We have the next fair value gap here on NASDAQ waiting for us at 10,865 and 3/4 that we could be targeting. Same for this one right here on the SP 500. But I mean, it's fair enough that we see a cool on right now after this massive move to the upside. Yeah, forget about trend line. I don't know, sometimes I really like to draw up trend lines just to see if support and resistance is actually holding up what other retail traders are looking at. Sometimes actually helps, but not on a 1 minute time frame. Therefore, it's too volatile. Pound US dollar also reversed, retesting the VWAP. Aussie US dollar pretty much doing the same thing. I think now it's just got to be patience until market open. All right. Yeah, I think we're not going to do anything prior to 9:30 opening. So we're just going to sit here now. Did anyone take some beautiful trade setup this trading week for the first trading week of 2023? What was your best setup on the S&P 500 that you actually took and caught live? I would have to go through my journal, but I'd say my best trade setup actually happened, I think, today. I was pretty satisfied with the move I caught today right here during the overnight range. Yesterday's overnight range was fabulous as well because we had this beautiful support on the IDR high right here, and I think I just saw I got a little bit late into the market because I took my dog for a walk after my London kill zone trading, and then I just got back to the screen and I saw the third candle here holding support on the IDR high basically right here. Then I entered on this bullish engulfing candle with a pretty tight stop loss for a nice risk to reward trade for a type A entry after a bullish bias have been confirmed. Feel free to share your best trade setups for this week that you actually caught live into the chat here on Discord, and we can look at them together until New York is opening up. That was a beautiful setup. I did not continue trading this beautiful reversal here. Also nice opportunity here. I think we actually had a volume imbalance here as well. Let's zoom in here. Yes. Filled the fair value gap, continuation further to the downside. All right, let's see. Okay, we got a bullish bounce off this fair value gap. Let's go over to our 1 minute time frame chart to see what we're actually looking at. We've filled in fair value gaps right here and fair value gaps right there. We could be looking at another bearish fair value gap to be filled. right here. Same goes for the NASDAQ chart right here, bearish fair value gap. If we continue in this bearish market structure, making new lower lows, lower highs. Same goes for US 30, where we also left behind a small volume imbalance right here, but I'm not going to draw this up right now. We are now 3 minutes away from the New York opening. Let's wait and see. Nice rejection of this fair value gap. All right. Two minutes. I expect either we are going to continue to bounce basically from this fair value gap for a continuation move higher towards buy side liquidity above our previous day's high, or we are going to continue pulling back, maybe towards this fair value gap right here for a continuation bounce further to the upside. That's all 5-minute time frame, of course. Or we might actually fill in the fair value gap down here, but this would mean a quite sharp drop further to the downside. But as of right now, on a low time frame, we are in bearish market structure. We just had our shift bearish. We filled in the first fair value gap, but I wouldn't bet any money on it 1 minute ahead of the New York opening. Let's wait and see. Our previous day high is right up here on NASDAQ. $329. 3, 2, 1, and markets open. NASDAQ is leading the move with a move to the upside, while US 30 is leading towards the down direction. Let's check out the SP 500 right here. Okay, we open up right here with a beautiful opening gap to the upside. Let's close this again. Okay, downtrend continuation it is. So this fair value gap was a beautiful continuation entry short. We just overshot it by a little bit right here on NASDAQ. But on all the other charts, this could have been a beautiful opportunity to continue into the downtrend basically right here. Zack. And another one right here on this fair value gap after we broke market structure. Same here. And same here on US 30. Did someone act based on this market structure shift, fair value gaps or something like that? Did someone actually enter into a short position? So this would be our next target here on the S&P. On NASDAQ, we already filled in this fair value gap. Same on Dow Jones. No, actually not. We have this volume imbalance that would be interesting to look at. No, I'm not getting there. Right here, very tiny one though. Let's see, we made a new lower low, making this almost recent swing high. So if we're breaking this, we could be looking at more upside today, but we will see. So let first 5-minute candle of the New York open and close. We already wicked inside of our 5-minute fair value gap. getting bought back up. Yes. Do we have anything? Oh, yeah, we would have a small volume imbalance right around this level. Right here. Do you see it? Of course, it's a bullish volume imbalance right here. But we overshot it by quite a bit, so nothing really very precise. It's still precise. I mean, it's a 1 minute time frame. It can't be spot on every time. Good enough for an entry opportunity though. All right, so we broke our most recent swing high here. Yep, we are also breaking it on NASDAQ and also on US 30. Let's see if we're going to break the next swing high. Because the overall target would still be the previous day high for all the buy side liquidity on the E-mini Dow Jones. We're not really far away from it. Shouldn't be taking too long. Same for NASDAQ, same for the SP 500, but relatively speaking, NASDAQ is the furthest away from our previous day high. All right, we had a market structure shift bullish again. On a low time frame, of course, on a higher time frame, I say we're still in bullish market structure. New volume imbalance right here. Right below, we have a fair value gap. We're on our way up. We're about to break our previous day's high. All right, let's see if we maybe form some SMT divergence or if all three indices are going to continue further to the upside. So we broke the high, the initial high that formed at 853 right here on US 30. Let's see if we can break it on S&P and NASDAQ as well. And we're about to break our previous day's high here on the E-mini Dow Jones. Let me zoom out here a little bit. So that's previous day high here on the S&P 500. And that's our previous day high for the NASDAQ. All right. And we're about to break our swing high. We're pushing through our previous day's high, so already nice move right here at New York opening. Another volume imbalance right here. Good morning, what about CME? Okay, no, I misread that. Nothing new in the chat. All right, on a 5-minute chart, yeah, we wicked inside of this 500 fair value gap for the continuation move further to the upside. So the market structure shift that we actually had, of course, it could have been profitable depending where you would have set your target. If you chose, for example, this volume imbalance or maybe just this fair value gap and entry right around this level. Let's say you entered at 50% of the fair value gap and placed your stop loss above the swing high for a take profit target right here. This loss would already be a 2.75 risk to reward ratio. Going to 50% of that fair value gap, a free risk to reward ratio. So profitable overall. But of course not the full reversal, because on a 5-minute time frame there's no actual market structure here. It's just low time frame, low time frame. Ideally, we'd like to see a higher time frame also to have to shift the market structure. But of course, because the market has a fractal nature, the low time frame is always going to be giving the market structure shift first ahead of the higher time frame. All right, so we're pulling back quite significantly. We are starting to form the SMT divergence I was asking for. We went above the previous day high right here, and we're just, Yeah, dropping down like crazy. Basically trapped in a few more longs, maybe. We will see. Nasdaq is already about to break the most recent swing low here on a 1 minute time frame. So we will see. All right, move over to the S&P, bearish engulfing candle and M5. Bullish fair value gap here on US 30. We already broke through it on the S&P 500 and same right here on the Nasdaq. Wait and see. We broke the low on Nasdaq right here now. For a continuation further to the downside. No, we're not going to sell by market here. Wouldn't make sense. We could wait for a pullback maybe. But here we had SMT divergence play out perfectly. Of course, entering based on that SMT divergence, I'd say would have been very tricky. I mean, of course, you could have entered right here on this pullback, but this was just a pullback. It could have also been a pullback, in another word maybe, that filled in this fair value gap perfectly to the tick for a continuation move further to the upside. You know what I'm trying to say here. So this could have also been just a fair value gap fill for a continuation move further to the upside. Of course, based on the SMT divergence right here, but who is to say that this is actually going to be the high? Of course, that could be an idea that you could basically bet on, even though I don't like the term betting. It's more or less like gambling. But if that's your idea and you place your stop loss maybe above the swing high right here on the S&P 500, based on this early SMT divergence idea, it would have been rewarded quite well so far. So all three charts broke this most recent swing low here at 931, continuing further to the downside, forming some sort of a double top pattern here with SMT divergence. Let's check on a 5-minute time frame. We're now below the 50% level of our initial range, starting here from 820 all the way up to 850. And our DR IDR range is starting to form here on our 5-minute time frame. Let's wait and see. Maybe we get some nice fair value gap pullbacks here on a 1-minute time frame for a continuation entry short. And don't forget, we also have more news coming in about 20 minutes. Right here, boom, there we go. Small volume imbalance, but I'm not gonna draw this in now. We could use our Fibonacci tool to look for a pullback, maybe into a premium array across all three charts. Filling in some of this opening gap right here. All right, let's wait and see. But definitely a bearish 5-minute candle, a momentum shifting candle. I could imagine that enough 5-minute traders whatsoever continuing to trade into the short direction. I don't think that many people right now are considering, after this big 5-minute candle, considering to take on more long trades, at least for scalpers. Can check the 15-minute time frame, pretty much same for that, huge wick to the upside. Now filling in fair value gaps. If we check the hourly time frame, We got rejected from the bigger hourly fair value gap right here that we drew up earlier at the beginning of the stream. But we refined it down to lower time frame fair value gaps. 4 hour and the daily right here, where we initially wanted to see the SP 500 to break out outside of our previous week high and previous week low, because as of right now we're still in this ugly range inside. All right, perfect. So that's all done. We see that we get that continuation move. We only filled in a fair value gap right here on NASDAQ 100 for a possible continuation short. On NASDAQ 100, we're already inside of our initial fair value gap right here, or basically at around our previous day's low. We're still quite a few points away from our previous day low on the SP 500. Same goes for US 30. So right now, NASDAQ is leading that move to the downside. All right. Now we touched on the side of this old fair value gap as well. What a short to the downside. Pump and dump. And dump and pump. 150 ticks. All right, let's see if we might get a bullish reaction of this 5-minute fair value gap here. Let me get rid of this thing, whatever I might have drawn on it. Our DR, IDR high. Okay, so we're now inside this fair value gap. Let's just stay on a 1-minute time frame. See what we get. We might maybe get some SMT divergence, some more SMT divergence. We already had beautiful SMT divergence very early on, right ahead of our 8:30 news candle right here. Higher low, lower low, right on the US 30. And again, US 30 danced out of the row. Right here, we had a higher high, while on the SP 500, on the NASDAQ, might take the lows for a nice divergence. Yeah, exactly. But we will see. Right now it's looking rather bearish to me, but we will wait for 10 p.m. news or 10 a.m. news. Yes, I keep that in mind, because we have PMI news coming up in 15 minutes at 10 a.m. New York local time. Non-farm employment change forecast 200, previous, okay, let me refresh the page. 223k, forecasted 200,000. Unemployment rate 3.5, forecasted 3.7%, so I guess that's something good. Previous month was 3.6% unemployment rate, so that also went down lower. They expected an increase in the unemployment rate, and they actually got a decrease, so that's good news. Unemployment change 104k and forecasted was 5.5. What? Same goes, that's Canadian unemployment rate. Average hourly earnings forecasted was 0.4. Month to month, we actually got 0.3, less than previous month. All right, so we actually wicked inside of this fair value gap now completely. Same on NASDAQ and same on the Dow Jones right here. As of right now, we cannot talk about a SMT divergence other than this beautiful one right up here, where NASDAQ basically on a 5-minute time frame wicked above this previous day high right here, and we reversed right from here. Pretty much the same as we did here on SP 500. We went below our previous day's low right here, and the gap almost filled on SPX. Yes. Let me draw it up actually again. That's the gap we're talking about. That almost has been filled. We will see how hourly traders will also react at 10 a.m. because at 10 a.m. we also get our new hourly candle opening, and I'm curious to know how hourly traders react after. I mean, of course, you see the typical pattern, a beautiful double bottom bounce right here, forming a beautiful W formation. You could also consider it a triple bottom right here. We wicked into it once, pulled back up twice, and for a third time we wicked below it a little bit, so a small liquidity grab right here. Huge move to the upside, but this candle basically got removed by the following 1 hour candle right here at 9 a.m. So we will see how hourly traders react. Maybe we see a bearish engulfing on a hourly time frame, which would, I'd say, trigger more hourly traders into a short position compared to not. All right, so let's go back to our 5-minute time frame. We see that we're currently filling in that gap. Let's compare all three charts. That's our previous day low, from which we got here rejected for the first time right now here on NASDAQ. We completely filled in the opening gap right here on the SP500 ETF trust right here. Ready for a reverse, I'd say. All right, so 349, but it's for today. I mean, I think earlier Jacob PA, according to ICT, NFP days are usually one-way moves. I mean, yeah, I'd say usually, of course, not every time. I'd say today was the exception then. We had one way in each direction, basically, one move in each way, with a beautiful SMT divergence at the bottom and the top of the move. But of course, call or actually taking those trades needs a lot of experience, especially if it's NFP Friday. I'm gonna be staying on this live stream up until 15 more minutes, and then I'm going to take a little break. I'm going to leave the live stream running right here on this window, and then I'm gonna be back as soon as our DR range has formed, which is going to be at 10:30 a.m. New York local time. So I'm taking roughly a 30-minute break from streaming. All right. Right into the live trading for chat right in here. What do you think is going to happen today? Use a, I don't know, what emoji could we use? We could use a thumbs up for continuation to the upside today, or thumbs down for a continuation move further to the downside. React on this message. Hang on here. Hang on, so I'm going to do the first one. I'd say we are going, yeah, go on, can't be wrong. Let's see, let's go up. Let's react bullish off this 5-minute fair value gap right here, and hopefully break our previous week's high right here, which is represented by this red line, because we've stayed within this goddamn range for too long already. This is our previous week's high and our previous week's low, and we basically stayed within this range for, including weekends right here, for the past 22 days, almost for a whole traditional month. Of course, only 14 trading days, but 22 actual days, excluding the weekends, inside of this previous week's high and previous week's low. And Yeah, both choices are thumbs up. I think someone else used a different emoji, so I guess everyone's bullish in here. I can add a thumbs down. Hang on. Down, down, down. So I'm just going to be betting on down. Yeah. Let's see how this 5-minute candle is closing, because we also got a few. Let's get rid of some of that stuff. That's way too much on my chart right now. That was the beautiful trade today during the overnight range right here. With volume point of control, retested once, twice, 3 times, continuation, tapped into the previous day low, profit target. Could you please, someone else for, I've got a YouTube live stream running as well. Hang on, I'm going to copy the link. So let's see. So we also got a few fair value gaps to the downside right here. One right here and another one there. Let's compare it on all 3 charts. Maybe we see a volume imbalance. So we've got a fair value gap right here. And a fair value gap right here. We already moved through that. The next one's waiting for us. A few ticks away. Let's see. So low, low, low. We fill in a fair value gap. This chart is not really interesting anymore. 5 minutes, so one more 5-minute candle before we see before we get the PMI news release. Oh no, hang on, sorry, I copied the wrong link. No, not message link. I have to copy the normal link right here. There we go. Perfect. That's linked to the YouTube live stream, or someone else restream it right here on in live trading for. Bounce off the VWAP, interesting. Pound US dollar was a US dollar, same bounce. Okay, so we're starting to move higher up in this pullback. We had a volume imbalance right here, but we just moved straight through it. Same goes for here. Let's check our 5-minute chart. So that's the last 5-minute candle before we get our 10 a.m. New York local time news with a new hourly candle opening. So we will also have a look at the hourly chart. So right now prices are pulling back, which is a great sign. Completely basically refilled this liquidity void or parts of a liquidity void on a lower time frame. Great sign. But the market needs to show a lot of strength to continue making higher highs basically right now after this SMT divergence. So we're on our way up, no doubts about that. We will see. Five-minute time frame, so we're just gonna keep watching right here. So we had this fair value gap. Let's turn on off our DR IDR for right now. Let's be patient. 3.5 more minutes. Looking at our whole move to the downside. Now that we know the pullback is here, our 50% level, our premium would be right above this level for a continuation move further to the downside. But overall, based on the higher time frame right here, we are still in bullish market structure as long as we're not taking out this low right here. But of course, the lower time frame often dictates what's happening on the higher time frame based on the fractal nature of the market. So we will see. rejection. We've got 2.5 more minutes left until the next news event is happening. Lots of news today. Let's see how our little poll is going on. Okay, it's only me who thinks that's going to the downside, and only a few votes, so nothing spectacular. And again, if there are any questions, feel free to share them in the Discord chat right here. 2 more minutes. All right. And above this high right here, yeah, it's not really a high, so we can't really compare it. Let's wait and see. 1.5 more minutes. All right, 1 more minute until the PMI news are released. Let's watch it here on a 1-minute time frame. Small volume imbalance. That's what I mean. They're just too many of them most of the times, but that's why I would not continue drawing them through time. Because yeah, there's too many. Pretty much the same with fair value gaps. Your chart would look just too messy with too many areas of interest or support or resistance or targets where price is basically being drawn to. We had this question earlier on during the stream. So let's see. 10 more seconds. And continuation to the upside, please. Haha. Let's go. Come on. New hourly opening as well. So new hourly volume flowing into the market with news. So we will see. La, 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 la. If it's just going to be a fair value gap fill or an actual reversal. Another one. We had our first reversal here. Next reversal right here. Another reversal right here. Let's see how many reversals we can get during one NFP live session. All right, big wick to the upside, but it's just a 1-minute time frame. Enough time for a continuation move. Let's see if we can get a close above 50% of this impulse move to the downside. Sellers are still relatively strong. All right. So I can get rid of this line right here. Those ones right now, I'm gonna leave this on. I don't need this anymore. That was my trade from earlier. That was my last trade yesterday. DR IDR. So let's turn it on right now. So we already start to see our range forming basically, even though the master basically avoids NFP event days. So we will see how the DR IDR range is performing as soon as we get the close at 10:30. If we get a bullish or bearish bias confirmation. But overall, I'd say after this impactful move from the 8:30 news, this pullback inside of this 5-minute fair value gap, and the strength price is currently showing, I'd say we're going to have a continuation move further to the upside that could look something similar to this. We're going to break above our previous day high, we pull back again, and hopefully we are able to break this previous week's high that would finally get us out of this consolidation range that has been going on for quite some time. So let's check our 1-minute chart. We already retraced more than 70% of this initial impulse. All right, seeing some initial rejection. CFDs are going nuts. Was the US? All right, I'm going to leave the chart open. This one right here, where we see the comparison between all three indices. I'm gonna be back within the next 20 minutes, right before we get our close of the DR IDR range for the New York kill zone from 9:30 until 10:30 a.m. And yeah, I will be back in 20 minutes. All right, we are back. Please mute, thank you. Yeah, if you don't want to be interrupted by all those people that can't mute their mics, just jump on the YouTube live stream. So I marked up this ICT tweet buy stop target, which is basically our current daily high right here at 3876 and a quarter. We did not fully reach this level yet. We are currently retracing. So are we on NASDAQ 100, and the same thing goes for the E-mini Dow Jones. We're just consolidating again below our previous day's high. All right, let's go over to our 5-minute chart, because in about the DR range has basically formed now. So we are going to wait for a confirmation for a bullish or bearish bias for the day. We can already draw up some fair value gaps right here. NASDAQ breaking structure. Okay, have a look at it. Well, yeah, but that's just the lowest wick. We have fair value gaps below it. I would be very patient, and we see that. I'd say this is pretty much irrelevant as of right now. We're going to be focusing on our DR range right now on a 5-minute time frame. We have our previous day high, previous day low, previous week high, previous week low. Our 000 key levels here at 3,800 and 3,900 that we are going to be focusing on. So right now we can start to draw in some fair value gaps right here. We had the initial reaction of this bullish bigger fair value gap that was created at our news candle here, right here at 8:30, the NFP news candle. We have equal highs basically right here. This is the buy stop target that ICT referred to in his last or most recent tweet right now. So we could be drawing in this general area as, let's say, overall resistance. Let's just make this a box with borders without background for general resistance. We wicked inside of it quite a few times. Right above our previous day high and right above our 000 key level. Also, okay, let's continue. We have a fair value gap right here on a 5-minute time frame. No other fair value gaps than that. So we can go down to a lower time frame and draw up some more fair value gaps. So on a lower time frame, we're gonna leave this right on here, and we're gonna label it as an M5. So we just have it on our chart. That's an M5 fair value gap. Right here we have another 1-minute fair value gap. M1. The next fair value gap. Already NASDAQ breaking structure, use 30 high, possible divergence forming. We will wait and see. So we've got another 1-minute fair value gap. I will switch over to our comparison within a few seconds. Just trying to mark up some of the fair value gaps on the way to the downside. Now let's ignore this one. Fair value gap 1, fair value gap 2, pullback. Beautiful. Let's compare again. So NASDAQ again went above the previous day high, continuing on its way further to the upside. I think before we get a potential divergence reversal setup, we are definitely going to take out buy stops or basically take out stop losses of short sellers that are already positioned short in the market above those two relative equal highs, also on NASDAQ, and above our most recent swing high here from 850 relatively to this one right here at 850. And same for this one right here, where we had the initial bearish divergence that brought us back all the way down inside of our 5-minute fair value gap. But as of right now, I would not be looking for potential reverse opportunities. The divergence, other than the previous day high and low, is not there. We're still below this most recent high here at 930. Same goes for the Nasdaq 100 compared to the Dow Jones. Same for the S&P. So we will see. We will wait for our ICT buy stop target to be hit. Right now we're right at the top of our IDR high. So we will see. We bounced off this bullish fair value gap once, twice, almost 3 times now. We will see if we can actually break through this resistance on the SP 500. We could actually draw it out all the way over here. So this is an area that a key level that needs to be broken before we can continue on our path to our previous day high and to our 3900 000 key level. My mic's muted on Discord. Is it? Hello? Hello? No, it should be... No, I don't know. Mojo, maybe you muted me. This could be the reason for it. I checked before I started streaming again. Alright, so let's wait and see if we can break through this high of the DR, or if we get a bullish confirmation setup, basically. So we have to break above this level right here. So I'm going to set alerts so we are not able to miss it. Right here, alert set. Let's also draw a few lines right here. Actually go up to a 5-minute time frame on all the charts. Let's remove those drawings here. They're not really interesting right now. We are focusing on the... Okay, so now we broke our high on the E-mini Dow Jones and we broke the high on the S&P 500. So we should be looking at a... Yeah, we broke through this resistance zone right here, right around 3876 2.25. So this is ICT's buy stop target that he wants to basically see taken out. He mentioned that in a tweet, I think, right around when I went for the quick break, right, basically. So right now we have 22 seconds left right here. Let's go to a 5-minute time frame. We've got 3 minutes left for a confirmed 5-minute close above this level. Right here, let me add a price note. And ideally, he also mentioned that he'd like to see our DR high 3875. That he ideally would like to see a key level. It's either going to be 3900, the 000 level, or 3800. Basically a 00 level, not a 000 level. Sorry about that, but 3900. So the next 000 level would be 4000 right here. But those would be the next targets. All right. So we're about to break highs on all of the charts, so not really relevant what we saw before with the market structure, potential market structure shift that has been pointed out. Muted on my end. Well, I can see myself with that little green circle around talking, so... Okay, let's wait and see if we can break the high on Nasdaq as well, and if we can actually reach up to our previous day's high, which would be a target for me right here. Our previous day high is sitting right at 3885 and 50, and right here would be the key level that we would like to see taken out. Let's see if we can match a few things up. Let's draw our range from our IDR high to our IDR low. This would be our IDR high. And this would be our IDR low. Right here. And right there. So for a 0.5 standard deviation target to be hit, we would have to go above our previous day high, which I think right now is pretty likely in my opinion. We're just going to leave this on the chart. We have a beautiful optimum trade entry fair value gap lining up right here. If we zoom in right inside of this price action, we can search for volume imbalances but there are none right here on a 5-minute chart, and we're just going to be keeping it simple and only looking at 5-minute volume imbalances. There's a slight one right here, but I wouldn't really count this as a proper opportunity or volume imbalance. Okay, right now Nasdaq and S&P already broke the current highs. We're just waiting for Nasdaq to pretty much do the same right here. Let's wait and see. So we've got 20 seconds left for our bullish bias confirmation. 20, 9, 7, 6, 5, 4, 3, 2, 1. Confirmation is in. Nope, I don't want to use this symbol right here. I wanted to use the triangle. Okay, for some reason it doesn't want to give me the triangle. Where's my goddamn mouse? Here. Alright, recently used. No, doesn't matter. We're just going to flip this around for our bullish bias confirmed right here. We make this green color. So now we have a bullish bias confirmed. Now we could be looking at potential trading opportunities, so entry opportunities right from our DR IDR high, which would be right here. We are going to color this in yellow. Let's make this a yellow color right here. We have a few fair value gaps that we could enter on. We have our 50% point. We have our optimum trade entry, and we would of course also have our retirement setup area. Let's refine this, which would also be lining up with this previous order fair value gap that has already been filled in almost completely. So those would be interesting areas of interest to take a potential trade from to hit our targets now that we have a confirmed bullish bias. All right, we're about to take out our previous day high. I'm just going to mark up the standard deviation so I can get rid of the Fibonacci retracement tool right here, 0.5. But I wouldn't really be focusing on the standard deviations for today after such a big move. I would more or less be focusing on what's actually importing our previous day high, our 3,900 key level. Nope, 3,900. Yep, exactly this one right here. And our previous week's high, which is roughly at 3,975. Let's make 3,020. Our previous week's high, our previous day's high, our 3,900 key level, 00 level. So we just scratched our previous day's high. We have now a confirmed bullish bias. Let's check if Nasdaq is about to break the high as well. So as of right now, no reason to look for S&T divergence unless we are actually going reverse from here. So let's wait and see. So we have scenario A, that we are going to pull back for somewhere right around this area into our IDR or DR high basically for a continuation move further to the upside, maybe pull back another time, test our previous day high, run right through our 00 level at 3,900, maybe consolidate right here a little bit. And then ideally we'd like to see our, oh, come on, now it's gone, our key level right here at 3,920, our previous week's high being taken out, which would bring us or get us out of the consolidation. Hang on, pipe structure. I'm going to send you the link to the YouTube live stream. I'm also restreaming it live on YouTube because most of the time the trading room right here is full. So this is scenario A. Scenario B would be maybe a 1-minute fair value gap that we could react on again. So we could, for example, draw the volume profile, and we see that the highest amount of volume or the highest amount of transaction has been put in place right up here, right up high. That's the volume point of control with our volume high area. So there's very likely going to be plenty of orders right there to protect prices, to protect the price from continuing further to the downside. So we will see the next area of high volume would be right around this area right here. We have a slight volume imbalance right here. We don't have a fair value gap. We only have it on the 1 minute time frame. It's lining up pretty nice. We filled it in once and twice. And the next area of low volume that we could be targeting would be right inside here on this 5 minute fair value gap, which is also being confirmed by the volume profile. Or of course an ideal optimum, a retirement setup, basically popping back inside of this range. All right, so let's see, let's compare our charts. We see that all indices broke the high that was formed at 850. So right here, our 850 high right here, 850 high right here on NASDAQ, and our 850 high right here on, where is it actually? Our 850 high that was already broken previously, where we had this SMT divergence between all three US indices. We formed a lower high right here. Let me get rid of those executions. They're just in the way right now. We formed lower highs here on the S&P. If you watched the stream earlier on, basically right when the NFP news were announced, lower highs on NASDAQ and higher highs on the E-mini Dow Jones. We broke through the previous day high, had the reversal back inside of our fair value gap that was created right around 8:30 when at our NFP news candle right here. I'm curious, did anyone who's watching the stream right now catch this long trade based off this fair value gap? If you did, just send a thumbs up or something into the chat. It would be really interesting to see if someone actually took the trade during or basically post NFP prior to market open right here at another market already open up by that time. So nice one. Beautiful entry. I would definitely take some partials right now at the previous day high. This is the next liquidity pool that was targeted right here. We just scratched it and immediately got a rejection from it. Otherwise, the next target would be 3,900 and 3,920. My volume profile settings, hang on, I can show them to you. 100 row size, value area volume 70, and style. I'm only showing the volume profile. Of course, I could also show the volume area high and the volume area low, but no, I leave that basically off. So volume point of control, ideally we would like to see a retest of this area if we want to see a continuation further to the upside. But as of right now, we have a bullish bias confirmed, means we are looking for an entry long into the market. We have our new hourly candle open right here at 11 a.m. New York local time. So that's our new hourly open. Let's make this a gray line. And our next hourly open up until lunchtime. As of right now, if we check on the hourly chart, we see that very likely hourly traders are going to enter this market into the long direction. What is the yellow box again? Hang on, let me go down to my 5 minute time frame. The yellow box again is the range between our highest close right here from the DR and our highest on the highest point of the wick, basically from our DR and IDR, basically the space in between, the area in between. So we could see most of the time we see a pullback further into the DR range to fill in some volume imbalances, like for example during the overnight range right here. Pretty similar setup. We had our overnight range, we closed below, giving us bearish confirmation right here on this candle. just a quick analysis. That was my trade I took today, basically, prior to the NFP news. We had this move to the downside, and if we draw the same thing here, we use the volume profile from our swing high to our swing low right here. We see the volume point of control, and the area of the highest volume was right inside of our DR range. So we can simply mark up this area of high volume. We can also draw in the fair value gaps. For example, this one right here, right below this fair value gap. We also had, like, let me make this in a different color, or maybe lower opacity right here. That's our fair value gap. And right below our fair value gap, we also had a volume imbalance that was filled pretty early on. So let's make this an orange. That's what TheMas7er is always doing. So we pulled back, and I got a beautiful entry on this first pullback right here with my stop loss above this wicks high. It got pretty close to my stop loss, but luckily I did not get taken out. We had another bearish engulfing reaction, and my overall target was this sell side liquidity for the first contract, and for the second contract I waited until the previous day's low has been hit for a beautiful 5.5 risk reward trade. And pretty much the same thing is what we could be looking at basically today. We also had our volume point of control, this time a little bit up higher. Now we actually close above the 50% level. So yeah, is the little volume balance from below of any interest? 10.05. Where's 10.05? I think that's on the 1 minute chart then. This one right here. Of course, it could be interesting, but therefore price would have to retrace quite a bit of this total move to the upside so far. Right around 65%. So of course it could be interesting. We will see if we get such a deep retracement. But to be honest, yeah, who knows? It would also be right around the 50% level of the DR. But we see that the most amount of volume from this move to the upside has been put in place right upside here, and we continued going up higher. So we could define this range as a reaccumulation of longs, basically, taking out all this buy side liquidity that was above those sell stops and stuff like that. Oh, sell stops? No, buy stops, triggering buy stops into the market, maybe faking them out to eventually reverse price on them, maybe fill in this volume imbalance right here on an M1 time frame, or maybe the fair value gaps. We will see. I'd say what we get until 11 a.m. That's only 9 more minutes until 11 a.m. until we get a new hourly opening. Right now the hour is looking super bullish, also based on the DR. So we will see. Where can I find volume point of control? Right here, where you usually hang on, what's it called? Prediction and measurement tools. Right here in this section where you usually grab your long and short positions, you find the fixed range volume profile. It could be that it's only for TradingView Premium or Pro Plus users, I don't know. But that's the volume profile. And if we drag it right here from this move, basically right here for our DR range, we see that our volume point of control from this move to the upside here until 10:30 a.m. New York local time was sitting right around here. The next area of high volume would have been right around the 50 level. And we have a few fair value gaps that are likely to be mitigated, but we will see how deep the retracement will actually be. We can go down to a 1 minute time frame to see if we get anything out of it right here. Possible trade opportunity based on a fair value gap right here. We just wicked inside of it with a tick or something maybe. So if you took that entry long, good on you. Nice opportunity. Ideally, I'd like to see a retracement further back into, or retesting the DR high for an optimal trade opportunity. But as of right now, we're still forming higher highs and higher lows, so we're going to be monitoring that closely. It's premium, yeah, unfortunately. But most of the time it's almost, if you see an uptrend and you're curious where the volume point of control is, it's most of the time where you see the longest period of sideways movement, which would be right here in this example. So let's see if we can break 3,900. Ideally, I'd like to see a DR pullback for a nice entry, continuation entry, but we will see what we get. Oh, that's my alert for 5 minutes before 5 a.m. New York local time. Let me turn off that alert. All right, let's go to a 1 minute chart. So what I just saw on one of the channels on the Masters Discord is that someone bought it based on this volume imbalance right here. So we could be looking at this one right here. This was a beautiful opportunity. Of course, we wicked below it, also retesting the fair value gap, but a nice continuation opportunity above the high. So now we will see, we have a few fair value gaps that are still open to fill with a new volume imbalance right below it, here on a 1 minute time frame. Could be looking forward to paper traded long right here. Right above the previous day high and going sideways, retesting. So we will see our next target would be right up here. And as of right now, we could be, as long as we're holding some sort of support. Hang on, let me redo that. From our lowest point. Nope, that does not make lots of sense. Let's see if we can use some sort of a trend line here to, yeah. Let's leave this on for a initial trend line. We did not touch it every time, but that's just a general measurement for the uptrend as of right now. Just to follow price action. See if we can break this uptrend right here. Everyone's got it in their head. I'm going to delete it. I don't want to. May you create a setup so it becomes easier to copy it for us. I'm not doing any trading signals right now. I'm just talking a little bit about the price action right off now, as of right now. Overall, what I can say is we have a bullish confirmation. The setup A would be we retest the DR high basically and continue up higher. So this would be worth a 1 hour entry. The next entry would be right around here, around the volume point of control, where you could break it down to a 1 minute time frame and search for volume imbalances, like for example this one right here and this one right here, or for fair value gaps, even though this one has already been mitigated or at least worked in a little bit. So you could look at this 1 minute fair value gap, which is also right around the opening price here on a 1 minute time frame. Overall, or you look at, for example, this 1 minute fair value gap right here for a potential reversal long, but that all depends on your trading. So I'm not going to tell you, I mean, that's the master setup anyway. I can't really tell you that to enter right here or right there. This is a entry opportunity. Of course, we're right above the previous day's high. We are wicked below it again, and now it looks like we are continuing further to the upside, amping up or getting some more people to short into this market or buy into this market before actually unveiling what's lying upon us. So right before 11 a.m. New York local time, I wouldn't do anything anyway. We will see what the next hourly candle will bring us here on a 1 minute chart. So as of right now, there are plenty of opportunities or plenty of different ways how you can enter into this market. We have a bullish bias confirmed, so that already slashes out quite a few other scenarios for us. So the overall next target, I'd say, would be the next key level here at 3,900. How we're going to enter into this market could be already just based on this fair value gap, based on this volume imbalance or this fair value gap, whatever it is, it really depends on your trading style. I'm just pointing all out, maybe in case you forgot them on your own chart. We will see. Maybe we get a massive run to the upside before the new hour is opening up. If we quickly check the hourly chart, we see we have a massive bullish candle right here on the hourly chart after pretty much 100% retracement of our NFP hourly candle. We have our previous week's high sitting right here, waiting for us to be taken out in our 3,900 key level. We have an old previous day high that we could also be drawing in, so this could be a target area right here and this area right here, just so we have it on our 1 minute chart when we look at it. So those are all highs that were formed during this week. Let's get rid of this one below 3,900. Perfect. 3,907, 3,900 and 3,920. Those would be overall profit targets for right now. New hour open up. So we will see how that is going to shift the markets, or if it's going to continue further to the upside or further to the downside. We have a unmitigated volume imbalance right here below. This very small one right here, let me actually make it more visible. We're just going to increase the opacity. That's our volume imbalance right here. That's another one right here. Fair value gap, we wicked inside of it already, so we will be patient and see. Not going to rush into anything. There's another small volume imbalance that is about to be filled. A new one just being left behind. There's so many on a 1 minute time frame. Let's go back to our 5 minute time frame and see. So yeah, basically not much happened. We will see if this new hourly candle will be able to push us up to our 3,900 key level to maybe expand our range above our previous week's high. Because like shown earlier during the stream, I can now get rid of our previous day high and low right here. We see that basically for the past, we could also drag it out further into the past right here. So basically we've stayed within this range right here from the 19th of December. So that's a range of, in trading days, that's a range of 12 trading days, and with counting in the weekends, that's a trading range of 18 days that we've stayed within the same basically highs and lows of the previous week. So this is still our, those are still our previous week's high and low. I'm pretty sure they are. Nope, that's the high and low of our second last week. Basically we formed the high on 19th of December and we formed the low on the the 22nd of December on Thursday. On Wednesday the 21st we formed this high and we formed a low on the 22nd of December, and ever since we did not leave this range. So we will see how, if we're maybe able to set ourselves up for a beautiful new week, taking out the key level, going for a range expansion or a breakout out of this daily consolidation sideways. Okay, so we're continuing our way to the upside. bouncing off the volume imbalance right here, leaving behind a new one, kind of getting sick of drawing all those little volume imbalances, but let's see. So as of right now, it's looking rather bullish. We can check the 15-minute chart as well. Let's quickly get rid of all our drawings. As of right now, still looking super bullish. We are above our previous day high. We're holding pretty strong above that. Our next target would be somewhere around this high. This would be Wednesday's high. This could be the next target for us. And the target after that would be Tuesday's high right here, 5 a.m. high at 3906. So those two levels are going to be interesting to look at right here and right here for our next target. Nope. What did it do now? All right, here we go. Before we had our 3900 key level. Thursday's high? No. Wednesday's high? Tuesday's high? Now where's Tuesday's high now? Yeah, Tuesday's high and 3900 key level. As of right now, after we broke out outside of this range, the only few good entry opportunities that you could have taken would have been this volume imbalance right here. We did not close below it, or maybe by a tick or something. Hang on, maybe I just have my drawing off as well. Yeah, we basically retested it, continue further to the upside, left behind a new volume imbalance and a fair value gap, wicked inside this fair value gap. This could have been a potential entry, but ideally we'd like to see a retest of the DR IDR or the entry right here. We can compare it on some of the other charts. I mean, as of right now, we are still waiting for a pullback to happen, at least to maybe one of those volume imbalances. I'm not looking forward to trade today anyway with live money, so I'm just going to be focusing on the analysis. Let's have a look at NASDAQ. Let's duplicate this tab. Get rid of the other ones. I don't care about the other ones right now, at least for this week anymore. And we are pumping. We're about to break through Wednesday's high. Is that right? Hang on. Let me also point out our previous day's high right here. And yes, we are breaking through Wednesday's high as well. So now we officially broke through Wednesday's high. This line was our previous. Hang on, let me label that quickly. Previous day high right here. Take out. Then we have because basically for the whole week we just consolidated. That's all we basically did. We made new higher highs and higher lows, but only by a slight bit, after which we straight up reversed again. Okay, right here, Wednesday's high, previous day's high, major key level, I don't have to name that, and that's going to be our Tuesday's high. And it's our previous week low. We can also look for our current week's high and low. Let me open up the weekly chart for that very quick. Our current week's high is also sitting at 396, so that is already our Tuesday's high. The current high of the week has been formed on Tuesday, so we're waiting for this to play out. So let's check it out. Now we've got all the levels on our chart. Previous day high. So we scratched Tuesday's high, so we will see if we now get a deeper pullback. Okay, I just checked the chat right here. Let's move over to NASDAQ. Maybe we got a better entry opportunity on NASDAQ after the DR range was formed. Let it load, let it load, let it load. Keep watching the chart. Another small volume imbalance that we could be reacting bullish from right here. All right, let's see. So after we have to go onto a 5-minute chart to confirm everything. Getting an initial bullish reaction of this volume imbalance. So this uptrend is still holding strong, pretty much. Okay, so we basically closed above our DR high, confirming our bullish bias right here. Color this in green quickly. So our bullish bias is confirmed by the time of 10:35. We get a pullback into the range. So if I'm looking for longs type A, so basically with type A or type 1, I mean longs out of this range basically right here between the DR high and IDR high. So that's what I would be looking forward to target for a type 1 entry, because sometimes on expansion days you don't get those complete pullback entries for the continuation move higher to the upside. So this would be entry opportunity A, and we actually got it on NASDAQ compared to the SP 500. We did not get that. We closed above and we did not get a pullback into this range. So we can also now look on a 1-minute time frame what we're looking at. So on a 1-minute time frame, we see that as our DR high, DR low, basically previous resistance that has been turned into support, and we continued further ahead in terms of support and resistance stuff. It also lined up perfectly with a fair value gap that has been left behind right here. So this would be a bullish fair value gap. Let's color this in green. Bullish fair value gap for an ideal entry long into the market to continue with this uptrend and to target the 0.5 standard deviation. The 0.5 standard deviation of our range. We go back to the 0.5 to the 5-minute time frame. 0.5. We use our Fibonacci retracement tool and we're looking for our IDR, DR low and DR high, which is going to be right here. 0.5 standard deviation has been hit, so this would have been our profit target. So if we go back to a 1-minute time frame, we could now frame our trade idea. So based on this entry opportunity right here from our type 1 entry could have been right here on the beginning of this fair value gap with the stop loss at the wicks low with our take profit target at 0.5 for a 2.84 risk to reward ratio for a nice continuation trend to the upside. You could have entered, for example, with multiple contracts or with 1% risk. We will see how price is going to react. We had another few bullish fair value gaps that we already reacted bullish from right here. 1-minute fair value gap tested once, twice, filled in completely to the tick. A smaller one right below here that hasn't been filled yet. Another one right around the optimum trade entry of our DR range. And let's check for volume imbalances quickly. Important ones that stand out. Here's a small one, but come on. Let's quickly check 15 seconds chart. Look for market structure. So we had this uptrend, higher lows, higher highs, higher low, higher high, market structure shift here on a 15-second chart. Let's do this real time. Trying to do that analysis on a 15-second basis. Market structure shift. We pulled back into, did we pull back into the fair value gap right here? Nope, we did not pull back into the fair value gap, but we are going to continue creating lower lows right here. All right. Let's go back to the 1 minute and check the SP 500. Go to a 1 minute chart. Market structure shift. I think we need to confirm it on a 15-second time frame. Made our most recent swing high right here. Our most recent swing low is either going to be this one right here or this one right there. We broke it right here. Here we would have actually received the entry with a fair value gap right here. We wicked inside of it, but prior to that we did not take out, or we did not have a market structure shift or a change of character, whatever you'd like to call it. So yeah, that's where we're standing right now at a short-term or lower time frame, 15-second time frame market structure shift right here. So we could be looking at a pullback now that we took out Wednesday's high as well. Just a few points shy or ticks shy of the 3,100 key level, which would be great to target. But we will see. Let's go back to NASDAQ on a 1 minute chart. Continue drawing in some fair value gaps that could be interesting to take trades from. Let me get rid of that. That's not interesting. Boom, there we go. So we've got this one in right now. We've got our lower time frame market structure shift. What we could be looking at as a higher time frame, we look at our most recent impulse. So right now we're at the 50% level of our most recent impulse to the upside. We could also be checking the volume profile. Those are things I like to do before actually planning on getting into a trade. So we see this huge volume inefficiency down here. There's lots of orders in the volume point of control. Like mentioned before, usually the point of time where price goes sideways for the longest amount of time. And we have the confirmed fair value gap right here, or volume imbalance right here. Inefficiency, you could basically say, not a imbalance because, or not a volume gap. All right, so that's confirmed. So we could be looking forward to maybe target sell side liquidity here below those two relative equal lows, right around our optimum trade entry at 0.7 with this bullish fair value gap for a potential continuation entry. Or we were pulling back further into our DR high, or we actually have a larger pullback. But overall, I'd say on a higher time frame for a market structure shift to be valid. Now, 5 minute time frame, we don't have to really look for market structure shifts with such a in such a move to the upside. Reprice then this volume imbalance. Go to a 5 minute time frame. Pretty interesting. But you can't tell me that you're actually going to take trades based on those tiny little fucking areas. It depends where they are, of course, I agree. But I don't know, I think people are putting too much focus on all those volume imbalances. Of course, they can be important, but not everywhere. Like, for example, here it was great during the overnight range this morning, during the London kill zone, where we got this, where we also had a volume imbalance or a volume gap right here. Above we had a fair value gap, a bearish one, with the volume point of control right stacked upon it. But did we reverse on the volume imbalance or this gap right here? No. Did we reverse on the fair value gap? No, we overshot it. Where did we roughly reverse from our volume area high? Volumes important, at least to me. So we see our volume area high, the area of the highest volume for this whole move to the downside was right here again, the longest period of sideways movement. Most of the time we wicked inside of it once, twice, 3 times, bearish engulfing. Every time we wicked inside of it, we had a impactful move to the downside to basically target our previous day low, which was right here from our DR, IDR low from yesterday during the New York kill zone. So of course it's great to snipe precise entries and stuff like that, but if you would have used the volume imbalance to snipe some entries right from here, would have been very likely stopped out once and twice if you use very tight stop losses. But again, here you could have seen relative equal highs, took them out, bearish engulfing candle, rejection from the volume point of control, fair value gap, volume imbalance, continuation further down. So that's just my opinion. Who cares about that shit anyway? All right, so let's check out NASDAQ, what NASDAQ is doing. Hovering around the 50% level right here. Let's say we are likely to retrace further on a 1 minute time frame. Starting to get some DMs right here on this guard. All right, I'd say let's continue watching price action. Again, volume, swing high, swing low, volume point of control, volume area high would be right around this level right here before we start to drop down in volume. Got a reversal point, of course. Maybe there's a volume imbalance there that it bounced off. Sorry, I'm just, yeah, having a few jokes. So let's keep going. Let's compare all 3 indices and see what we got. High right here on the same candle, yeah, pretty much. Right here above our previous day high. NASDAQ is the only index that has not reached above the previous day high as of right now. Currently retesting it, yeah, sort of. So let's move over to our separate charts right here. Let's go to a 1 minute chart, and we're pumping up. Also on NASDAQ, volume area high. We could basically do the same thing for the SP 500. Don't want to have so much stuff on my chart, but just to prove something here. If we would be only looking at the highest candles, or we could be looking at our volume area high. Okay, that's not really helping. The highest ones would be right from here up until, let's do right here. Those are the highest volume bars in this whole histogram. Held beautiful support right here around the 50% level of basically from the volume point of control, and continued bouncing up higher. I've been showing this little trick how I'm using the volume profile to confirm fair value gaps and using the volume point of control for quite some time, basically when I started streaming on this Discord server, and it's really helping a lot. And I think it's available for free, but you have to pay for the futures data on the CME futures chart to be able to plot it on your chart. All right. Fair value gap confirmed with volume, with not just actually gaps in the chart, but now also a volume histogram. And that really helped me a lot to confirm some fair value gaps that are maybe a little bit more important than others, and how much support this volume point of control and the area around the volume point of control actually has. But yeah, let's keep on going. Let's see if we can continue further to the upside. and we're not getting rejected by some of those fair value gaps right here. But overall, only on a 15 seconds time frame, we're basically in bearish market structure right now from our move to the upside. Market structure shift, but now we would already have a new market structure shift bullish on a 15 seconds chart. So if you're a future scalper, of course you can also watch the 15 seconds chart for market structure shifts and get really early on into a trend ahead of all 1 minute traders. But yeah, so let's have a look. Anything else interesting? Of course, if you have any questions, feel free to just send them into the chat. I will do my best at answering them. Next buy side liquidity is at 396. As of right now, I'm not streaming every day. I don't have a clear schedule yet, because when I'm streaming live, it's pretty much very similar to what ICT talked about in his I think last Twitter space or something. When I'm streaming live, I can't really fully focus on my own trades. I'm more focused with the analysis, if that makes any sense. Giving a live commentary basically. Paper trading works well, but if there's actually money on the sidelines or money at risk, then I prefer being in total silence, in complete peace, and just watching the charts and actually taking the trades based on that. Next buy side liquidity is at 396. We're at 1112. Buy side liquidity 3906. 3906. Yeah, that's basically Tuesday's high, 3906 or 3907, which would be the next buy side liquidity target. Or Tuesday's high, right from Tuesday basically. You can go check on your own chart if you want to. We have our key number level, which would be 3900, which could also be a critical level for price. But overall, hang on, let me redraw that. 3906. There we go. Tuesday's high, Wednesday's high, we already scratched that. Now we could maybe look for continuation setups based off this move from this volume point of control. 3901 and then 3906. Yeah, pretty much lining up with what we've got here on our chart. 15-second chart. Got a few fair value gaps left behind. Let's check the 1 minute chart. Could be looking at to fill this fair value gap. How did it go here? FX replay backtesting for the traders. Yeah, I've used that tool before, but what I actually did, which is also for free and more valuable to me, is I've got an old laptop basically, and I just have TradingView open up there on SP500, and I'm recording all this data on my hard drive basically. So I'm live recording all this data, so I can actually replay it in live time. Very similar to what you can do with FX replay, but I don't like having too many subscriptions going on at the same time, so recording it is for free and then I have it forever. Then I could go back and be like, oh, come on, let's replay the live price action of the S&P 500 from 2023 in like 10 years time or something, who knows. So yeah, I'm recording that and then I can go through it myself. I just started doing it this week basically. It's gigabyte efficient, or not efficient pretty much. Okay, so what do we see? Could we be forming some SMT divergence? Let's check the 1 minute chart. We formed lower highs on S&P, we formed lower highs on NASDAQ, and we formed equal highs on the Dow Jones. Right here, zack, market structure shift on the Dow Jones. 1 minute chart. Yeah. I mean, it's Fridays anyway. Fridays are most of the time not ideal to trade. especially on NFP Friday. So currently bouncing off the 0.5 level, volume area high level again. Could be just looking forward to fill a bearish fair value gap or a bounce off maybe this bullish fair value gap here for a continuation up higher. S&P 500, what we're looking at, filled in this volume imbalance, but also overshot it by quite a few ticks. So overall, this volume area right here would have been a go. Hang on, let me redraw that. Based on the volume profile. So there's some sort of SMT divergence. We made equal highs on mini Dow Jones and lower highs on all the other US indices. We had a market structure shift right here, filled in a bearish fair value gap right there for a potential continuation further to the downside with the next liquidity targets. Maybe those equal lows right here, this low, and after which followed by this low. Potentially. So let's do a paper trade here. Why not? It's practicing anyway. Stop loss, let's put it up. Let's put above this wick, even though this could be very likely buy side liquidity above relative equal highs. Our take profit target is going to be right here. That's our volume point of control as well, so I don't like to put my, let's go for a 2-to-1 first and see how it goes. Just leave it running there. Alright, we pretty much have a similar setup right here on the S&P 500. It's not real SMT divergence. I mean, we formed equal highs here on US 30, which you consider short at M1 fair value gap here around 3892. Yeah, sort of. We did not have the proper market structure shift I would ideally be looking for. I could show you an example of what, in my opinion, is an ideal market structure shift. So what we had yesterday, for example, after the New York hill zone, is what I would consider as a short. This was a textbook setup, basically, if you want to call it that. We continued forming higher highs and higher lows, pulled back, had a first market structure shift, but this was a fake out. So if you took some shorts right around this level, you would have lost one risk to reward, or 1R basically. We pulled back, making a new higher high. Had another market structure shift. We broke through this low right here, left behind a volume imbalance right here that has been remitigated. A fair value gap right here that also has been wicked inside of, another fair value gap right here. So plenty of opportunities to enter prior to the news here at 8:15 from yesterday for a continuation move further to the downside, which took out the previous day's low right here around the previous day New York hill zone. Very nice, I think, 100-point setup. Yeah, yesterday ODR, also a perfect textbook setup. If you would have bought the IDR high basically right here after seeing 1, 2, 3, 4, 5 candles holding support on it inside of a fair value gap, beautiful continuation entry opportunity. And afterwards catching the reversal pretty much very shortly afterwards at 7:35, right ahead of the New York hill zone. Ideal, perfect trading environment. Afterwards, followed by the New York range basically, where nothing happened, to be honest. So it was the overnight range for sure. And now we pretty much got the same thing. The overnight range was pretty much spot on with this opportunity short after a confirmed bearish bias. Took out the previous day low. NFP news basically skyrocketed the market right up here. We pulled back, filled in the fair value gap, continued making a higher high, and currently right now on our way to take out the next interesting area, next interesting buy side liquidity targets, like for example Wednesday's high, previous day's high, Tuesday's high, and the 3,900 key level in a quick summary. So would I be considering taking shots from here? it wouldn't be worth 1 hour for me, to be honest. So no. But I see what you mean here, right? From 3891. Before I want to see 3900 scratched, before I actually look for a reverse opportunity. Scratched or tagged, and for a continuation move further to the downside. I could be wrong. This could be the reversal opportunity, but as long as we don't break this most recent low here on a 1 minute time frame, not really looking for it. So what we're looking at on Nasdaq got stopped out here, did not work out. All right. Oh no, that trade is still running. Who would have thought that? All right, let me have a look at this quickly. What could we be? What's the time anyway? 5:30. I have a appointment for dinner in 30 minutes, so I will have to stop the stream in the next 5 minutes to actually have a few minutes left to get ready. That's pretty unfortunate. I thought I had a little bit more time. But you guys, you know the buy side liquidity targets. Who shared the other liquidity targets? Marcellulose also shared buy side liquidity targets. They're right around the Tuesday's high if you want to draw it out on your chart. Wednesday's high, our previous day high, that already has been taken out. The 3900 round level here is also a very interesting area for buy side liquidity to be taken out. If it's 3900 or 3901, doesn't really make so much out of it. So very big difference in my opinion. We will see. We just got a bounce off our previous day high. We've got one entry opportunity on Nasdaq basically with the close above, pullback inside of our DR high, IDR high, for a continuation to our 0.5 standard deviation. But I have to be honest, I don't really trade Nasdaq. I'm only focusing on the SP 500 when I'm trading the New York kill zone. Makes it a lot easier for me to, especially if you're on a 1 minute or 5 minute time frame, or sometimes even scalping on a 15 seconds time frame. Looking at two charts at the same time is a little bit much. I like to, if I get the setup on the S&P 500, then great. I had a setup for the day. If I don't, and I would have received from on Nasdaq, it is what it is. I'm not really getting mad or upset about that, oh, if I would have looked at Nasdaq, I could have made some profits today, blah, blah, blah. That's not really what I care about. Nah, the S&P 500 offers enough good entries throughout the week. If you haven't received one today during the New York Hill Zone, you very likely would have received one during the overnight range right here during London, and maybe even during Asia, with also a very beautiful setup where we did not get the confirmation above, and the range also did not close at the period of time. But if you would have looked at the Asian range this morning, or depending where you live, maybe evening, maybe nighttime, for me nighttime, we had, where are we at now? Come on, this was yesterday IDR, this was New York, that's Asia from today. We did not get a confirmation yet. We got the confirmation right here at 8:30, basically on this close. But we had a volume imbalance. We went sideways for quite a few candles. We had a fair value gap right below it. We wicked right onto our opening price line right here, filled in this fair value gap. Boom. Massive move to the upside right here at 8:30, confirming bullish bias for a continuation move, I think up to 3 standard deviations of our Asian range. Even if you would have gotten in a little bit later on, or maybe waited for this fair value gap to be filled in, you would have been left behind basically, because price reversed. But it already hit 3 standard deviations. So after a 3 standard deviation move to the upside, looking for pullbacks before London opens up doesn't make a lot of sense. So 2 beautiful trade opportunities today, and plenty of opportunities right here also throughout the day. So let's have a look. Currently going sideways. We will see how we are going to end up today. I'm going out for dinner now. So yeah, I'm very curious how the chart is going to look like when I'm back from dinner. Alright guys, take care, and yeah, trade safe and enjoy the rest of the trading day, or trading week basically.